name is Jared Lopez. I'm the Sales and Marketing Coordinator for Next Generation Trust Services. With me today is Pat Collins. He is the Senior Asset Manager for Gold for America. He's going to go over the investments into precious metals, and I'm going to go over self-directed retirement plan investments. First of all, Next Generation Trust Services is a third-party administrator for self-directed IRAs. Now, a self-directed IRA simply means holding non-traditional assets such as physical precious metals and other assets such as real estate, notes, and investments into companies using your IRA. With most custodians, you can invest in stocks, bonds, mutual funds, and CDs. We do allow these non-traditional types of assets. Now, Next Generation Trust is not a bank or a financial planning service. We do the administration and record keeping for non-traditional investments within retirement plans. We don't review the merits or legitimacy of any investment. So it is up to you and not Next Generation Trust Services to do your own due diligence when it comes to your investments. Just because we are doing this presentation today with Gold for America, it does not mean we endorse or work with them in any way. First thing we're going to go over is the types of plans that can be self-directed, the types of plans that can invest into non-traditional assets. And there are several types of IRAs. First is the traditional IRA. That is for tax-deferred investing. That is when you put money into a traditional IRA. It is a tax write-off for the tax year that you are making that contribution. However, the investments and any earnings you receive on those investments are tax deferred, so you will be paying the taxes on them when you do take a distribution from your IRA account. Presumably that will be at retirement age when you're making less income, so you'll be taxed at a lower income level. The Roth IRA is for tax-free investing, and the Roth IRA is a great thing because, again, it is for tax-free investing. So you put money into a Roth IRA, and there's not a tax write-off in the year that you put it into the Roth. However, the assets that you hold within that Roth IRA and any earnings you receive on those assets are 100% completely tax-free. So if I start today with $5,500 in my Roth IRA, and in 20 years it's $1 million, I made several great investments, but also that's 100% tax-free. The SEP IRA is the same type of plan as the traditional IRA, which is tax-deferred investing. However, the contribution limits on a SEP IRA are much higher than a traditional IRA. So as I mentioned, the traditional IRA contribution limit for 2014 is $5,500. With a SEP IRA, you actually can contribute 25% of your salary up to $52,000 for 2014. So each tax year, 25% of your salary up to a certain amount. This year is $52,000. The simple IRA is for small businesses. You can even have an employer plan or a qualified plan, such as a 401k, and have a portion of that be self-directed. So you can have an employer plan with a portion that is investing in precious metals, real estate, and other non-traditional assets. There are two specialty plans that are not retirement related that you can also self-direct. The first is the Coverdell Education Savings Account, and it is for a child's education. So child's education doesn't necessarily mean tuition. It can be room and board, it can be books, it could be meal plans, but a Coverdell education plan can be self-directed. And the other one is a health savings account, and that is for medical expenses. It is a plan that you do need to qualify for. It's only for high deductible health plans. You have several options for funding your self-directed IRA account here at Next Generation. You can make your contribution, so you set up an account and you actually put your own personal funds into an account. If it's a traditional account, obviously that's coming off of your income for the year that you're making the contribution. If it's a Roth account, it just goes in. It's not tax deferred. It doesn't lower your income level. The next option is a transfer, and that's when you're moving between like accounts. So if you have a traditional IRA at a Charles Schwab, a Fidelity, or one of the bigger custodians that's investing in stocks and bonds, you can actually move a portion of that, and you can transfer a portion of that to your Next Generation Trust Services IRA to invest in non-traditional assets. The third type is a rollover, and that's when you're moving between unlike accounts. And the most obvious rollover explanation is when you leave a company that has a 401k just sitting there doing nothing. You can actually roll over those funds into a traditional IRA, and that is indeed a rollover. The last option is a conversion. So with people making, if you make less money in a certain year, you can choose to actually convert a portion of your traditional IRA or your 401k into a Roth IRA, pay taxes on the funds added to your income for that tax year that you have the conversion, just so your assets and any earnings from here on out are completely tax-free. So it's converting from traditional, paying taxes in a tax year, and then going into a Roth account for tax-free investing. Getting into the meat of the presentation, we're going to be talking about investments. So I said you can invest in non-traditional assets. Now, there are two things that you cannot invest in using your self-directed IRA. You cannot invest in life insurance, and you cannot invest in collectibles. Collectibles are things like art, wine, stamps, baseball cards, collectible coins. So you can invest in precious metals. That's why we're here today. But you cannot invest in collectible coins. The only other thing you will need to really worry about is dealings with a disqualified person. The list of disqualified people are you, the IRA holder, the IRA holder's spouse, up and down the family line, ascendants, descendants, and their spouses, fiduciaries to the account, business partners, are all disqualified. So what that simply means is that if you have a piece of real estate in your IRA, none of these disqualified people can provide any service, cannot mow the lawn, cannot rent out that property. If you're looking to make a loan from your retirement plan, none of these people can accept that loan, even if it's at a fair market rate. If you're looking to have precious metals in your retirement plan, you cannot sell it to any of these disqualified persons. As far as possible IRA investments, it's literally anything else that you can think of that can be an IRA, that can be an investment, can be held within your IRA. So the major ones that we have here: real estate, precious metals, mortgage notes, investments into startup companies. You can even do international real estate or international companies, private stocks, hedge funds, and the list goes on and on and on. So an example of how investing in precious metals works within your retirement plan: first, you'll actually locate the dealer and depository that you're comfortable working with. At that point, you'll set up an account here at Next Generation Trust Services and fund it. When you set up an account here at Next Generation Trust Services, it's actually given its own specific name and its own specific tax ID number, so that that IRA then becomes its own entity that's capable of making these investments. You'll fill out some Next Generation Trust Services forms, including the buy direction letter and the instructions to purchase from the dealer. And Next Generation actually signs any documents on behalf of your retirement plan. And at that point, we'll also send the payment based on your direction to the precious metal dealer that you would want to work with. The dealer will then send the metals to the depository of your choice, and that's how you actually hold the precious metals in your IRA. You can't, and I'm sure Pat is going to be getting into this, but you cannot hold them yourself. You do need to work with a depository when it is in your IRA. So that's my very brief explanation on self-directed retirement plans and the structure of how they work. If you have any questions, you can email info, @nextgenerationtrust.com, or you could call the office at 888-857-8058, we're going to hold the questions till the end of the presentation. So after Pat speaks, we'll take all the questions that you have. You could just chat them into the chat box or the questions tab. I will be able to receive them and talk to Pat. So with that, I'm going to be passing over the presentation to Pat. Pat, how are you doing today?
I am doing absolutely fantastic, Jared. How about yourself?
I'm doing well, thank you.
Fantastic. So I will go ahead and take control of the screen here.
Sure, and Pat, I do want to let you know that we've been receiving a lot of questions on precious metals lately. I know that prices have dropped, so it really has been becoming a hot investment item. Do you care to explain a little bit about that?
Yeah, you know, and rightfully so. If you take a look at it, every single technical and fundamental factor is pointing at the fact that precious metals is really the safest, most conservative place one can put their money right now. If you take a look back to the 70s when gold was on during its last bull run, gold moved from $35 all the way to $850, an increase of 2,400% in a 10-year time frame. And what a lot of people don't know is that during that 10-year time frame, gold fell by close to 50% 3 different times. And it's very natural. It's a very cyclical portion of any precious metals or any bull market for that matter. And so us seeing precious metals pull back the way that they have over these last 2 years, it doesn't even remotely come close to stating that it's the end of the bull market. The fundamentals now are so much stronger than they were just a couple years ago. It just simply represents an amazing opportunity for people to pick up metal at prices that we haven't seen in years. And at the end, if anybody has any additional questions, we can go into that a little bit further. What I'm going to do now is just go into some very basic information, as well as in the first portion, how to just very simply own physical gold and silver inside of your retirement account. And a little bit of this in the beginning, maybe an overlap from what Jared just had mentioned. But following that, we're also going to go into some of the reasons why it's so incredibly important, especially right now, that people do have a portion of their assets in tangible physical metal like gold and silver. So first off, we're going to cover the very simple mechanics. As you can see in step 1, if you haven't already done so, you're going to need to establish a self-directed IRA with Next Generation Trust, which allows you to hold physical gold and silver amongst the other investments that Jared had mentioned in your account. And doing so is very simple. It's just a question of completing a basic application with some personal information. Once your account is established, you can then fund it by either rolling over an old 401k or one that's fully vested. You can transfer an existing IRA, or you can even fund a new account if you'd like Jared had mentioned earlier as well. And then lastly, for step 3, what we'll do on our end is we'll help you to create a portfolio of the right combination of both physical gold and silver that will help you to accomplish either your financial or your retirement goals. Now, once all of that's complete, your metal is then shipped fully insured to the Delaware Depository Services Corporation. And a couple key points to mention here about DDSC are that your metal is 100% insured. And another thing that I always think is important to bring up here as well is that DDSC is in no way affiliated with a bank. They're not a part of the banking system. They're not a part, nor have any affiliations with the government for that matter. So your metal being held there is absolutely safe. If you ever got to a point or age where you wanted to take a physical distribution in metal, you can typically have that metal delivered to your doorstep within 72 hours. Now we're going to go into the reasons why right now it's so incredibly important to own physical metal. And one last thing that I'd like to say here as well before we get going is please don't take my word for anything that you're going to hear today. All of this information is available online for you to not only confirm, but as well for you to do your own due diligence, which we absolutely recommend. So with that being said, our first slide here is inflation, the hidden tax. what is inflation? What's inflation in the first place? Most of us believe that inflation is when we see the prices of goods and services rise in cost. And that's actually not the case. That's the end result of inflation. Inflation is the inflating of or the increasing of the amount of currency in circulation, which then leads to higher prices. And as those higher prices are increased, as we experience those higher prices, because the more currency has been printed and the same amount of currency is chasing the same amount of goods. Now, the first chart you see here, if you look at the red line, is the current rate of inflation reported by the government of 1.6%. That's not bad, right? Now, if you look at the blue line represents the rate of inflation today of 9.5% if we calculated it how we did back in the 80s, with the main difference being that food and energy were included in that equation. Now, we've somehow come to the conclusion that food and energy, the two items that, at least in our household, we spend the most amount of money on, other than housing, aren't relevant in the inflationary index. Anybody that's filled their car up or has gone to the grocery store or out to eat over the last year or so knows that the dollar is losing a lot more value than simply 1.6% a year. So at the end of the day, what do these numbers mean to you? Simply put, you have to be making 9.5% on your investments just to break even, just to keep up with inflation. Now, let's take a look at why inflation is sitting at 9.5%. As a nation, it took us over 200 years to create $850 billion in circulation. So that was the amount of currency that had been created up until 2008, as you can see here on the chart. Since 2008, in only 6 years, we've managed to quadruple the amount of currency in circulation. So, put in other words, the Federal Reserve has created the equivalent of 800 years of currency in 6 years. But weren't we told we had to? We didn't really have much of a choice in it, did we? We had to bail out the big banks to fix the problems that they created, and by doing so, everything would be okay. It would create liquidity. They would begin lending again, which would then create jobs, and we'd be on the road to the recovery, or at least that's what we've been told. Well, let's take a look at what the banks have done with all of this money, these trillions that they've been given. Not a whole lot. This chart represents the amount of excess reserves, or another way to put it is money that the big banks have on deposit with the Fed. And as you can see, the amount of excess reserves skyrocketed from virtually zero to over $2.6 trillion in just the last few years. And remember, up until 2008, we only had $850 billion in circulation. Now, the Fed is paying these banks interest on that free money for keeping it on deposit with them. Now, what happens when the Fed stops paying interest on those trillions of dollars? Then it's no longer going to make sense for the banks to keep it there because they're not making any money on it, and that's when they begin lending it out, and that's when it finally begins leaking into the system. This is why, this exact chart is why we haven't seen massive inflation up to this point. The vast majority of the currency that's been created over the last 6 years, trillions with QE1, QE2, Operation Twist, QE3, it hasn't even hit the system yet. Now, how has printing trillions of dollars impacted our national debt? Pretty significantly. If we look all the way back to 2000, our national debt at that time was just over $5 trillion. Now, we've managed to more than triple that in 14 short years, with our current national debt approaching $18 trillion. This is more money that can ever be paid back in our children's lives or even our grandchildren's lives. And look at the relationship of gold to our debt. Do we honestly believe that this is going to reverse anytime soon? Doesn't it make sense that as we continue to acquire mountains of new debt, that gold and silver will continuously keep pace as it has over the last decade? Now we're going to switch gears a bit and get into how gold and silver will help you protect what you've got. Most people don't realize that since 2002, The Dow's only up around 40%. Gold and silver, on the other hand, are both up over 400%, and that's on the tail end of a significant correction that Jared had asked me about earlier, where we see physical prices of gold and silver at levels that we haven't seen in well over 2 years. Now, in the chart here, you can see how an IRA invested in physical gold has performed compared to one invested in the Dow, for example, over the last 12 years or so. Now, one other thing to pay attention to, as we believe it has incredible potential, is silver. Historically, the gold to silver ratio it's been about 15 to 1, meaning if you had 15 ounces of silver, you could typically buy an ounce of gold. Now, right now, we're only pulling 8 ounces of silver out of the ground for every 1 ounce of gold that we pull out. Yet, half of all of that silver is immediately consumed by industry. Silver is the second most utilized commodity on the planet, only behind oil. It's the best known conductor of electricity. It's used in every single cell phone, television, computer. It's got heavy applications in the medical as well as the solar industries as well. So taking into consideration how much silver is currently being mined and immediately consumed, the current gold to silver ratio is there's about 4 ounces of silver to invest in for every 1 ounce of gold. And yet look at this chart with data directly from the mint. For every ounce of gold the mint sells, they're selling 70 ounces of silver. This is an absolutely massive imbalance, which will at some point have to correct itself. And when it does, silver is going to be an absolutely huge winner. Now let's look at some of the unique features and benefits of owning physical gold and silver. Liquidity. Gold and silver are universally recognized. They can be liquidated anywhere on the planet and can also be bought and sold instantaneously inside your IRA with just a phone call. Storage of wealth. Gold and silver have been money for over 3,000 years. And those same coins from thousands of years ago still hold their value till today. Which brings us to the next point here, is gold and silver have never been worth nothing. They've never gone to zero. Over the past 200 years or so, we've been conditioned to believe that money is pieces of paper that we hold in our wallet. Now, the problem with that, though, is that we used to be able to exchange that paper for its equivalent in gold at the bank that was storing that metal for us. This obviously is no longer the case. The value of today's money worldwide is it's no longer tied to a tangible asset. The value is solely derived from the confidence one has in the issuing bank or government. Now, this type of currency, which isn't backed by anything, it's called the fiat currency. Historically, every single fiat currency to have ever been created has eventually been worth nothing. Zero. Every single one of them. And in just the last 100 years, there have been 34 different fiat currencies that have failed. So with a historic failure rate of 100%, what chances do we think the dollar has? Yes, the dollar is, as well, another fiat currency. Unlike today's currencies that are debt instruments that have to be paid back at some point with interest, gold and silver have no counterparty risk. Next, gold is money. Gold and silver have the longest successful track record of anything that has ever been used as money. And then next, we have hedge against inflation. A family friend of ours, he owns a gas station up in Oregon, and he sells gallons of gasoline for a quarter. Now, the catch is that that quarter has to be minted prior to 1965 when they contained 90% silver. So a quarter from 50 years ago, because it's made of 90% silver, will buy you the same amount of gasoline today as it did then. So as far as protecting one's wealth against that hidden tax of inflation, there's simply nothing more effective than physical gold and silver. And last but definitely not least, gold and silver thrive in times of uncertainty. I think we can all agree that we're currently living through the most uncertain times in recent history. We've attempted to correct the financial crisis of 2008 by creating trillions in new debt. Worldwide debt in the last 6 years has increased by 40%. The stock market's at the highest point that it's ever been in the history that it's existed. solely due to government intervention. It's not because we're thriving as an economy. We're currently close to $18 trillion in debt, which is double what it was just 7 years ago. We're already to the point of having to borrow money just to pay the interest on our existing debt. 5 of the world's top 10 economies have abandoned the dollar in international trade. They no longer use it when trading amongst themselves. And China and Russia, as well as the IMF, have all called for an end to the dollar as the world's reserve currency. And I could go on and on and on about how every single technical and fundamental factor for owning physical gold and silver is in your favor right now, but that literally could take days. So next up, let's take a look at the type of precious metals that are allowed in your retirement account. Gold, silver, platinum, palladium, you do have some restrictions as you're not able to hold numismatics or collectibles like Jared had mentioned, or junk silver for that matter in your accounts. And lastly, here's our contact information. Pick up the phone and give us a buzz. We've only been able to cover probably 5% of the information that's out there that can support you in coming to your own conclusion that this will make sense for you or not. You can give us a buzz here at the number 888-681-9353, or drop us an email and we'll make sure to get back to you immediately. That's it for my part, Jared. Thank you so much, everybody, for joining us, as well as for your time. We look forward to speaking with you, and I guess we'll open it up for any questions now.
Absolutely, yeah. We had a few questions that came in. Thank you so much for that information, Pat. The first one is, why is platinum and palladium doing so well when gold and silver prices have been dropping lately?
So platinum and palladium both have, the vast majority of their uses are industrial. And so, and at the same time, there's not a whole lot of people paying attention to platinum and palladium. If you take a look at the physical data, it's well known that both gold and silver have been, I won't necessarily say manipulated, but suppressed by the big banks. The last thing that the Federal Reserve or the big banks want is people to move into gold and to get that, gold is the real antithesis of what it is that they're trying to accomplish. And so that's one of the main reasons, is that there's not a lot of attention on them. The big banks pay attention to artificially manufacturing and keeping these prices at a controlled level until the free market takes over, and there's nothing that they can do about it.
Okay, great. The next one that came in, this, I guess, individual isn't getting the information he needs on segregation of metals within depositories. Do you want to briefly touch on that? Or is that something that the depository would handle?
No, there absolutely is the ability. There's a couple different types of ways that you can store metal at a depository. The first way would be segregated, which segregated means that your metal is held in a private safety deposit box like you'd have at your bank. It's not commingled with anybody else's metals. It's a very effective way to go, and so you don't, if you put in a certain coin, you're going to get that exact same coin out when you take it out or when you sell it. Now, allocated accounts are accounts that are commingled, so you have a big vault where you'll put in 10 American Eagles and 2 Monster boxes, and they're going to be mixed up and with everybody else's metal, and you won't get that exact same metal out. So to the gentleman that asked that question, you can absolutely get segregated storage. It may cost you a couple bucks more just because you're going to get the additional private box, but it's absolutely available.
This next question is someone who wants, they want the breakdown. I guess he heard you speak earlier about the current correction that's going on. So sure. Can you break it down a little further, and also what do you see in 20 years for precious metals?
Sure. So I don't know. Well, so as far as the breakdown, what we've experienced, other than 2008, gold and silver pulled back a bit in 2008 during the crisis. But what we've seen recently is, gold was all the way up to $19.50, and silver was up to $49.50. So we've seen gold drop by about 38%, and silver drop by about 60% in the last 2 years. And what's fascinating is that there's absolutely nothing fundamentally that should be that would be causing this. We're in much worse shape than we were just a couple years back. Like I said, we've quadrupled the amount of currency in circulation, and yet silver and gold are going to drop. And so it's just a matter of time before these metals absolutely take off again. And then what do I see for metal in 20 years? It's hard to say. I think that a typical bull market lasts around 20 years. There's going to come a point where the current financial system and structure of the world, it has to reset. It's the system that we're working within. It's broken. You know, you can see that all around us. Open up your eyes, and you can see that things aren't getting better. Everything's not, you know, fixed. And so I think that over the next 20 years, there will come a point. I believe that gold and silver will move into bubble territory, at which point we'll want to sell and get out as close to the top of that as possible, and then move into that next undervalued asset class. The main thing that, you know, most of our clients are wanting to do right now at the end of the day is they just don't want to lose what they've got. They've worked really hard for a long time, and they got hit back in 2000. They got hit back in 2008. And, you know, I have a ton of clients that I speak with on a daily basis, and, you know, they never got a phone call from their financial advisor prior to 2000. They never got a phone call from their financial advisor prior to 2008. They've never been recommended physical gold and silver, even though it's outperformed everything else out there, you know, over these last 14 years. And so moving forward, it's going to be interesting, but like I say, most clients, most people that we work with, they just want to make sure they don't lose what they've got, and they can safely and conservatively grow it over time, and that's exactly what precious metals will provide.
Okay. This next one is government intervention and global war tensions effect on the pricing. Do you want to go over that a little bit more?
So government intervention, I think, well, I don't know exactly how to answer that because I'd like a little bit more information on the question side. So if he has the ability to specify on that, that would be great. And then when it comes to war, so look at what's going on over in Ukraine, North Korea, Russia. You know, our world now is currently in a state of perpetual war. And if you look back historically, and this is, you know, going back not only hundreds, even thousands of years, when people get concerned, the last thing that they're going to want to do is, hey, let's jump into the stock market or let's jump into all paper assets. They typically tend to revert to the thing that has been money for thousands of years, which has been physical gold and silver. So they will eventually have a significant, and it's not just because of the war, that's just one of the aspects of it, but they will significantly take off here. And we don't know if it's going to happen within the next month or next 2 months or whatnot, but it will happen.
Okay, and I think the last one here, someone wants to know, he's saying that he believes that the precious metals market right now has been just as volatile as the stock market. How do you answer that?
I think it's been more volatile. If you take a look at over the last 2 years, you know, silver's dropped by 60%, gold's dropped by 40%. And so the objective, if one's wanting to, you know, jump in and out of gold and silver and do it more with a day trader type mentality and try to take advantage of that volatility, I'd recommend moving into an ETF or an exchange traded fund. Most of our clients, they buy one time and they're going to sell one time. They're not jumping in and out of the market, and they're not wanting to trade. But if this gentleman is looking at trading, do an ETF. If you're looking at long-term wealth preservation, then physical metal, where you buy it once and then you sell it once, which is, by the way, is something we'll also support clients in doing, is selling the metal and getting out at the right time. That's a great strategy as well.
Wonderful. That's it. That's it for the questions. Do you want to just give out your number and contact information one more time?
Sure. Our number here at the office is 888-681-9353, and you can also email us if you'd like at info@gold4america. That's GOLDFOR America.com. And like I had mentioned earlier, we have a tremendous amount of additional information we can get out to people to support them in really doing their own due diligence, becoming educated and informed about what their options are. And we'd be happy to help in any way we can.
Thank you so much. And again, if you have any questions on self-directed retirement plans, you could certainly email info, that's INFO, this time at nextgenerationtrust.com. Thank you so much, Pat, and we'll talk soon.
Thanks, Jared. Take care.